Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the US stock markets. We're also going to have a look at the VIX. We're going to cover the SPY SPY ETF, which is our proxy for the S&P 500. We're also going to have a quick look at the Nasdaq, and we're going to go over and have a look at the NQ1 and ES1 futures as well, just to compare structure and price action before the market opens and try and get an idea of what's going on. So without further ado, let's get underway. Okay, so as I mentioned in last week's video and have done for several weeks running now, until this upward trend breaks, unless this upward trend breaks, you've got no reason to be bearish. You should continue to see pullbacks as buying opportunities. We discussed the possibility of having entered an intermediate wave 4 with a wave 3 top coming in last week. There's still an off chance that's the case with a potential B wave high, but to be absolutely honest, looking at the price action, it doesn't appear to be corrective heading to new highs. It appears to be impulsive, in which case then the likelihood of this being an intermediate wave correction is far less likely, and we're going to have to once again upgrade the count to an even more bullish stance. So I think that every time we have seen a top come in for months and months and months, there seems to be pretty much the same attitude, which is this time it's the top, and the Twitterverse and the Twitter bears tend to come out and start calling for it to all be over, but then sure enough we give up a few percent and then we rally to new highs. So I'm going to say quite clearly now that I think the Elliott wave count here is of less and less importance, because if we are in a gigantic primary wave 3 and it's extending and we're pushing up to the 1618 extension or even higher, then we're not going to know anything for certain until this trend that we're in and have been in since the end of March 2020, until it breaks. And therefore what's more important at this point is the basic technical analysis confirming that. We can keep slapping numbers on, but we're going to find ourselves very much in the habit of pushing things further out to explain price behavior, when really I think it's just a case of waiting for, I mean, this is talking from a short perspective. If you wanted to short this for any reason, which you should not be doing in my opinion until you see evidence to do it, until you see this long-term structure break down, there's absolutely no reason to think this market's going to top anytime soon. So just assume that it will remain bullish and see the sell-offs as buying opportunities for as long as the supportive structure, which has carried us all the way up here, remains intact. If it remains intact, then it's a buying opportunity. You can always choose to enter positions knowing that that long-term structure has been support, and therefore setting your stop in the condition of it breaking. But trying to short into any of this, I think, would not be a rewarding experience, and for those who have tried it over the last few months, it has been a very costly experience. So we'll come in and correct the count exactly in a moment, but before we do, I just want to illustrate the point. So let's take the pitchfork we placed all the way back in September of 2020 and has been projecting price ever since. There's no sign at all that this is going to break down anytime soon. If it does, and when it does, then we can start considering the possibility of a bearish situation. But all we've done recently is come close to the outer band and come back up to the median line. Now last week I was discussing the idea of this potentially being a wave 3 top here, and then we were starting a wave 4 correction. We observed a 3 wave move down here and suspected the possibility of a 3 wave move to a B wave high and then a 5 wave move down in a C. Still possible, but I don't think particularly likely now. The structure off of this low, and I'll come over and show you it in the futures market in a moment, which will be completed once the market opens and we trade throughout the day here. The structure appears to be impulsive rather than corrective off of the low, and therefore this structure looks corrective. If this structure looks impulsive, it's the wrong way round. If we're going to make a new high, 3 here and 3 here is fine to get that flat pattern in a 5, but if we had 5 here, 3 here, that could have been a zigzag. We've come way too high now. well, not way too high, we could come up to 99.9%, but assuming we're going to make new highs and this doesn't have the structure of a 5-wave impulse anyway, I can't get a diagonal in here, so this solely looks corrective. That leaves the option of 3, 3, 5, or simply 3 done, and we're impulsing higher. I'm going to lean that way in the meantime, and unless these lows here break, I see no reason to think otherwise. So that's it. Just stay with the bulls. These buying opportunities, this pitchfork has been extremely reliable at predicting resistance and support and resistance. Until this thing breaks, then just stick with the bulls and treat these pullbacks to support as buying opportunities. Right then, so now that we've shown the long-term support we've got going on here, let's move this out of the way and update the count accordingly then. And I'll illustrate the current issue I'm having with my previous assumption of this being an intermediate wave 3. Okay, so the issue I have with this here now is we had this 5-wave move up and we were saying into a minor 5 of an intermediate 3, and then we just saw last week this 3-wave move down and discussed the possibility of trying to figure it out as either a 5-wave diagonal or a 3-wave WXY, presented this WXY count as a possibility for it completing. Okay, and then we would have to wait and see whether we got a nice clear 3-wave move to new highs or to 90%, because assuming this was a 3 to get that 5-wave flat pattern and down like that. In the last week, this price action off of the low does appear to be impulsive, more impulsive than corrective. Now it is possible that it's corrective and it's going to come up higher in 3 waves before retreating, but we won't know that until we see more data. So in the meantime, assuming that it's corrective, it's all about these recent lows. If we were to roll over and break these lows, then we can keep the idea of this being 3-4. Okay, because 4 is actually going to end up over here and this whole thing's going to be bigger. But at the moment, the issue with this being 3-4 at intermediate degree is it's smaller than its minor wave cousin over here. So what I'm actually going to do is upgrade this to a wave 1 and a wave 2 and assume that the intermediate 3 is even further out in the future, and things are going to continue to get more bullish and continue to push higher in this gigantic primary wave 3 that we're still in. So I think what I want to do for the meantime is I'll just keep this option. I just need to isolate all of the count in this area. Okay, we can't do, we use all these ones here. We'll put these in a folder and say alternate 3, alternate intermediate 4 bracket incomplete. Okay, we'll just shift this over here and we'll throw a little bit of extra labeling on to try and make sense of the idea that we're going to get some kind of expansive move and that this is going to turn out to be a 3-4. So let's just throw on the flat Fibonacci as well. We can put that in the folder so it'll help jog my memory of what I was thinking. This is all based off the idea that if we do get a reversal up here somewhere around the 123.6, 130.18 and then we start to head down, we can still keep this option alive and consider the possibility. So we'll take the fib, we'll lock that in place. Take that corrective move as well, and we need to change this to minute. Okay, we can take that, throw that into the alternate wave 4 folder, and there we go, the whole thing laid out. So if it does start to play out, we can come back and have a look at it. In the meantime, adding to the wave 3 extension count, I'm just going to bring the pitchfork up as a guide for the moment, as it has been so consistently reliable. And push the 3 out and the 5 out, and therefore the 4 out and the bigger 3 and the bigger 4, and just give ourselves some more space over here, as I see absolutely no reason to assume until proven otherwise that this trend is not going to continue. Okay, so 3-4 is now here. The possibility of calling this a flat is impossible. We did not get a clear 5-wave diagonal or impulse here. This itself appears to be 5 waves rather than 3, and this here appears to be 3. So this is easier to say 3, 4. So on that premise, what I'm going to suggest now is that this is a 1. Here 1 and a 2 is a WXY, and now we're moving up again, looking for a 1 and a 2, 3, 4, 5, and we're going to carry on up here like that. So let's label it. Say, got to come down to minuet degree. 4, 5, which means we've got to come down to minute. 1, 2, we're saying now. Then we're going to get into a 1, down into a 2, up into a long 3. Oh, got this the wrong way around. Up into a long 3. Down into some kind of 4, and up into a 5. I mean, I'm not saying that it's not possible we break the upside of this trend. It is. I mean, if we accelerate again and we finally break all of this to the upside, right, that would be synonymous with some kind of blow off top going on, which could definitely fit the idea of a larger wave 3 completing, but we can't see that until it happens. So in the meantime, 1, 2, and then this is going to be a 1 in here, 1, 2, 3, 4, 5, something like that. And we're going to continue to extend and build our way up into this large intermediate 3 of primary 3, and the count just keeps getting more and more bullish, stronger and stronger. Now, I know I'm sounding super bullish, and I guess I am, but the thing is, I would never argue against the bears if they break this long-term structure. If this breaks down and all of this trend support collapses and there's strong volume coming in with an impulsive move lower and all momentum turns negative, then I will definitely give the bears the benefit of the doubt that the top's in. But there's no point calling it. There's no point calling it until we see that occur. So that's now the updated count for the extension. I don't really see another way of getting this in here, really, because this has just come. I mean, like, this looked clearly like 5 waves into the 3. That's what our count was. That's what we've kept our alternate as, and it did look very believable. And there is still the possibility that we're going to do something like this. Okay, that's why we've saved that alternate count. But when I look at how clear this impulse looks, and I look at how clear this correction looks, and how much smaller it is than this, I just find it very difficult to believe that this is that the idea that this is an intermediate wave 4 already complete. I don't believe that. I'm not going to say it's impossible. I'm just not convinced at all by it. So I'd rather upgrade the count and just say that the 3 that we thought was completing here has actually got 5 waves in it to get to here. Okay. All right then. So that's the extension updated. So let's just come over and have a look now at the ES1 and what I'm saying in this short-term price action off of this low. So completed correction is a 1-2. We're saying that we can see 1 wave here, 1 wave here, and 1 wave here, 3, 3, 3. So you know, a 3 wave move to here, a 3 wave move to here, and a 3 wave move to here. No clear diagonal or impulsive move here. Obviously no impulsive move. So that means the labelling we've chosen of WXY fits perfectly well. Now, last week when we left off this 3 wave move discussing the possibility of a 3 wave move to new highs, this is where it's still potentially possible that you've got 1, 2 in here, 3, 4 here maybe, into a 5, into an A, B, C, very shallow B, and now we're going 1, 2, 3, 4, 5 into a C, and then this would have been A, this would have been B, and then we're coming down in a C, and that would be our alternate count. And all of that depends on if we top out and how things change from that moment, and then eventually the taking out of these lows. But in the meantime, I would argue that this looks clearer as an impulse than as a corrective ABC. So we can have a 1, 2 in here, then we can have a 1, 2, 3, 4, 5 in here, 3, 4, 5 in here, 3, 4, 5 in here. So 1, 2, 3, 4, 5. So it's probably coming in sometime soon. 1, 2, 3, 4, 5, maybe up to about here. And then that will be another 1 within a 1. You see what I'm saying? So 1, 2, 1, 2, 3, 4, 5, 1, 2. Alright, then into the 3 of the 3 of the 5 on the 5th minor wave of the 3rd intermediate wave. Okay, so I just wanted to show you that because this does look impulsive to me. Okay, it doesn't look like 3 waves. When I'm looking for a zigzag, I'd rather see something which divides like with parity. This is equal to this. I'm not saying that's impossible because you could argue it hasn't done it yet, right? But then we'd have to look at the expansive targets for our flat. So we've got the 123.6, that's why we put it on the count, 131.8 and the 1618. So you could come all the way up to here in a B for the original idea of 3, then all the way down to here in a C for the original idea of 4. So it is still possible, but that's why we'll keep it as an alternate. In the meantime, we'll focus on it being more bullish. Alright then, so that's the ES1. Let's come over and have a look at the Nasdaq. I think we probably should really consider doing the same here. So we've had a 1, 2, 3, 4, 5 impulse wave here. We've had a 3 wave pullback here. Difficult to express this as anything else, I think. And perhaps a 1, 2 already underway. NQ1 is showing similar price action. That we seem to have a 1, 2, 3, 4, and I'm now in a 5th of a 1. So I think that's what I'm going to stick with and update the count here. So same gig. Let's just bring up the, which one is it? Pitchfork here that we've respected again. Shift this up here to 4. Don't worry about the time frame. I'm literally guessing. All this will get filled out as it develops. So yeah, 3's got to go, 4's got to go, 1's got to be promoted up to here. This is a completed 2, and then this is perhaps a 1 coming in and a 2 of a smaller wave degree, and we're going to get a nice big 3, 4 and 5 up to here, but no point labelling that until we see evidence of it. In the meantime, I'm just going to go 1, 2, 3, 4, 5. Make this minuet wave degree. And there you go, we'll save that there. We don't need to worry about the 3, 3, 3, 5 here because we've got an alternate in the SPY to remind us. So if we were to come back towards the highs here in the Nasdaq, even break them, we get a reversal. We have to watch these lows. If we get these lows, then the original idea of 3 and 4 is back on the cards. But for the moment, we're downgrading that in favour of things being more bullish. Alright, so let's just see how that looks with the Nasdaq here, or the NQ1. Quick look at this for a moment. Big powerful 3 going past the 2618. So even for 5 wave structure in an A, this is impressive. So if we were to get A, B, C parity in the idea of the original count, we've still got a hell of a thrust. A hell of a thrust up to here anyway. We should take out the previous highs before reversing. So in the meantime, if you're expecting the bearish count, you have to wait for a 3 wave move to finish. Now it could be a truncated C, but it's more likely to push to parity, and then you've got to look for reversal signs and for this previous resistance which would become support, right? All this, I'm going all over the place, all this here and all this here would be very strong support. So more likely you're going to come up in a larger wave 1, come back into all this noise and then get moving again. If you were to come down in a bearish impulse after completing 3 waves up, then this support would likely break as we come down in 5 waves. Is there anything else I want to do? I've forgotten to turn off the Discord. Slap on the wrist for that. Okay, so let's now do some basic analysis for a minute then. We've updated the count, but as I've expressed already, while we're in this tight trending range of just stepping up, and stepping up, we can keep throwing as many counts on this as we like and keep pushing it up higher and higher and higher in a wave 3 extension. But until something gives, there's just no way of knowing exactly where we are when it's going to end. We've got our rough targets based off of our primary wave 1 pivot. So assuming that we get a full wave 3 extension, it can stop at the 100, it can stop at the 123.6 or the 1618 more likely. So that gives us 550 on the SPY. So the long-term trend is over to here, and that's just to get a 3. And then you're going to get a larger 4, and then you're going to get a 5. So, like I said, for as long as this trend keeps going up, trying to call completion of a larger 3, it's kind of pointless. We have to wait until we see something much more convincing than the corrections we've seen lately. Right, so if we bring up our moving averages for a moment, bring up our VPVR volume. Alright, and we'll come back out to the day time frame. Where's our regression channel here for the whole thing? Okay, so another break of the 60 exponential moving average, which is the orange line here. We met the edge of the regression channel here, and this was after coming up, and we spent so much time bouncing around the median line here, bouncing around the mean, came back up to the mean, had a rejection back to the second deviation here, and then now we're heading back up towards the mean. I mean, that would be a pretty logical place to complete a wave 1. 1, 2, 3, 4, 5, find resistance into a 1, come back into a 2, continue to press on. The 60 is pretty strong support once in a trend, once in a larger wave degree. It seems to be pretty consistent. If I can show you what I mean, here's our initial pivot back here at a larger wave degree, same primary one. Now we come through the 60, back up and through it again. But when we move into the lesser wave degree of this one, into the 3 associated with this one, which is everything since, right? And the smaller pivots within that, we tend to get above the 60, and then we just stay above it until we finish something a little bigger. Okay, so another wave degree complete here. Then we stay above it, and stay above it, and stay above it, and stay above it, until we finish something a little bigger again. And we come through it again. And we can see how recently we've come back up above it, come back to it, but we haven't broken it like we did here, or broken it back like we did during this one. So this correction on its own just doesn't seem to have done enough technical damage to consider it a larger completion. So that's why I'm thinking 1, 2 makes more sense. It's deep enough to have come back to it, but it's not a large enough completion and correction to have broken it and suggested a larger wave degree completing. Other than that, I can't really go on much else at the moment. Every time we come down into these levels, we find support. So volume ramping up into the correction, volume declining into the rally. I mean, it's just, this is the norm. Volume declining into the rally, volume building up into the correction, volume declining in the rally. Every leg up comes on declining volume, and every thrust down comes on rising volume, but the rising volume never translates into collapse, never translates into follow through. It's just an ongoing theme. So until we see something signifying these conditions changing, we get the reverse. Let's say we still get the volume in the sell-off, but it continues to ramp up, and we break structure, we break these moving average, we break this regression channel of a pitchfork, we break all the signs of this upward trend, and then we start heading lower with rising volume. At that point, you've still got to look for confirmation with the shift in momentum supporting it as well. You've got to find a count that fits it, and I think also you should come over and have a look at the VIX, which we did last week, so let's come over and do that now. I mentioned in last week's video, and had a couple of people come back to me personally in terms of feedback regarding my opinion of these compression patterns, and giving me a little bit of flack over what I said, but I stand by what I said. Trying to predict the completion of these things is an absolute fucking waste of time. It's just an absolute waste of time. They take forever, and they don't necessarily result in anything each time you break out. You think you're there, and then you're not. You know, we've had this multiple times through here, we've had this breakout here, and it hasn't translated into anything. It's just collapsed again. So as I said, I stand by my original point and say that this trend is of far greater interest to me. This consistent rising lows is more interesting to me than trying to identify when the completion of one of these large compression periods finishes, because just because it finishes and pops doesn't mean we can't come crashing right back into it. That's exactly what we've done now. So have we come back to fill a gap before breaking out and going higher, and we are going to have that B wave top and then collapse in a C for a larger correction? Or are we just going to get pushed down here again till we find these lows, then trundle along, find the lows, trundle along, find the lows, and then eventually get a proper spike? Until you see it coming, and you see the trend breaking in the market, and you see the VIX coming up to support it, then you can't assume that the bull market is over. You have to assume it's going to continue. No point really looking at the PCC at the moment. It basically looks the same as it did. Data comes in so much slower, and there's very much we may be able to consider it a leading indicator, but it's working on such a slow time frame or small time frame. We've had warnings of extreme lows and extreme greed and complacency going all the way back to August of last year, and we've come back and down into these territory, broken through the 250 here with the 60 come back to test. It started moving up. By the time this next updates, we'll be trundling a little lower again. But this could be a process of stepping up all the way up to here, and that could take, well, I've just eyeballed a guess, and that puts us out into 2023. It could come up way faster into 2022, but like I said, before you see all of these conditions, you're going to need to see structure break in the market first. So that's it, guys. That's all I've really got for you today. Not a particularly long one, but I felt it was the only sensible thing to do at the moment, is to just upgrade the count, push that free out further, and assume that we're still in a gigantic primary free which is still playing out, and we'll count the waves as they come from here and see if they make sense. Assuming that this is a 1-2, we should now expect a stronger thrust up in the free. Smaller time frame, we seem to be completing a 1, so a pullback in the smaller time frame would make sense before continuing that larger free. But for the meantime, keep watching things go up, I think. Okay, thank you for joining me on this technical analysis of the US stock markets. If you're new to the channel and you like what you've seen, please feel free to subscribe, smash the like button, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my patrons. If you're interested in becoming a patron, there's a link in the description below. Go check out the tiers, see if there's anything you're interested in, and if you're not following me on Twitter yet, please do so, as not everyone seems to be receiving notifications when YouTube videos get uploaded, so I use Twitter to inform them. Now, before I go, I'd like to wish you all a very, very Merry Christmas. You will hear from me another couple of times this week, but in case you don't see those videos, I'm going away this Friday and won't be back for 10 days until the 27th, so have a good one, and I will see you then. All the best. Bye.